After a 3-year hiatus, Keith Gill, the amateur meme stock trader known as Roaring Kitty, finally appeared live in living color on his YouTube channel, sporting longer hair and, oddly, his right arm in a sling, to explain why he's once again taken a massive position in GameStop, with controversy about his motives swirling. Kelly O'Grady joins us now live with whether he cleared up questions about that. And Kelly, what was different in his message this time around? The newsroom was glued, though, to his YouTube, waiting for arrival.
Oh my gosh, Liz, same here, right? I mean, this was one of the wildest investor calls that I've ever attended, and we had to wait quite a bit, right? I mean, Keith Gill, aka Roaring Kitty, he showed up nearly a half hour late to the whole thing, but he ultimately did speak to a peak of roughly 600,000 listeners, sharing he had no game plan for the live stream. He even admitted that he might be cuckoo at one point. That's always been Gill's appeal, though, right? He's kind of very counter to the traditional investor. We did glean three key things, though, that I want to share with you. First, Gill's position in GameStop is the entirety of his portfolio. What we saw was the value following the market's close last night. It was roughly $586 million, 5 million shares, 120,000 call options. Of course, that's been fluctuating wildly today, with the stock down roughly 41% right now, still higher, though, than when Gill bought in. The second takeaway I have is Roaring Kitty really believes in GameStop's future, if you believe him. He reiterated his confidence in the company can revamp its legacy business, and said it all comes down to the team and CEO Ryan Cohen. Here's what he had to say.
I know the question marks will be, well, what has he done? What is he doing? What's the plan? You know, those are fair questions, but do you really think he's been doing nothing, or that GameStop hasn't been strategizing, testing some things here and there, and how to move forward? I think that's pretty ridiculous. I think we've seen enough, in particular from him, to be honest. I think we've seen enough from him to think he's got a good head on his shoulders, and again, we haven't seen anything. It's speculation. You can argue that, but honestly, the way he seems to be handling this, we don't know a plan, and that's fair. But boy, you're right-sizing the ship. You see even the legacy business cutting costs, trying to stabilize some cash flows, just try to stabilize that legacy business. But now it's all about the transformation.
Now, I would say a lot of investors disagree with Gill after GameStop released their earnings this morning. A few days early, by the way. It was a 29% drop in sales this quarter versus last that we saw, a $32 million loss. My final takeaway, Liz, though, is the meme stock leader. He seems to have learned his lesson versus last time around. He chose his words really carefully, likely because he's being investigated for his trading activity by multiple regulators. He consistently repeated himself, saying you shouldn't trust anyone blindly. While it might be legally safer, Liz, the stock did drop 25% while he was speaking, and certainly much lower than we saw it close at yesterday, Liz.
I know. It was all very, very fascinating to watch. It's almost as if you really start to see the democratization of investing, taking it away from Wall Street, whether the stock is up or down. Fascinating. So fascinating, in fact, that Roaring Kitty's influence on the trading of GameStop shares raises some questions in the finance world. Are his words, deeds, ex-posts, Reddit memes, YouTube streams, stock manipulation, or just an investor letting the world know where he stands? And could he find himself, nonetheless, in at least the sights of the Securities and Exchange Commission? We're bringing in two of the top compliance and enforcement experts in the nation. Joining us now, Jacob Frankel. He's Securities Enforcement Chair at Dickinson Wright, formerly the Senior Counsel in the SEC's Division of Enforcement, and former E-Trade Compliance Officer Amy Lynch, now of Frontline Compliance. She's also a former SEC Compliance Officer. Jacob, I'll start with you. Did you see anything during this live stream that looked like market manipulation?
Not that looks like market manipulation. I would really title it the Don't Blame Keith Gill show. He's saying this is not advice, disclaiming responsibility, but follow me and make money from me anyway. I think he really wanted to take this. I looked at this as trying to take an opportunity to say, whatever happens to you in this market, you cannot blame me. to me, the issue with respect to whether he's involved in market manipulation or maybe even insider trading, given the way the SEC has been extending its definition of insider trading with recent insider trading case win in California, is what's happening behind the scenes. Is he talking to other people? Is he coordinating his trading activity with others? Is he, for example, having multiple accounts that he controls and trading between those accounts? That's really where the rubber hits the road when it comes to possible violations, in particular manipulation. But I really looked at this as his public risk management. Stay with me. It reminded me of somewhat like Martin Shkreli or Sam Bankman-Fried in terms of we're big personalities.
Those guys were put in prison, okay? This is an individual.
I'm talking about from the personality, the presence that they were able to command, and the following that they were able to establish as sort of cult figures. And what I'm really looking at here is, nobody viewed Martin Shkreli at the beginning as being a violator of the securities laws. Liz, you and I talked many times over the years about people like Bernie Madoff. I'm not saying he falls into that category. Okay. What I am saying is, he's engaged in activity that would invite that level of scrutiny from the regulators, and he's bringing it on himself.
Amy, you worked as a compliance officer at E-Trade. The Wall Street Journal had an article saying maybe they were looking into whether he had done anything wrong. There's been no action yet. You're the expert here. What did you see in what he did today? And yes, in fact, it did look like a little bit of a, hey, don't blame me. But guess what? Anytime you make a trade on any of those platforms send you the same type of disclaimer, do they not?
Yes, indeed. And at one point during his presentation, he was joking when he showed his E-Trade account. He was like, yes, this is me. This is really my account. Yes, it's an E-Trade. And he was even kind of jokingly threatening E-Trade about removing his account. He's like, yeah, I see all the headlines. I know what you're trying to do. And he then clicked on the HTML code, which actually anyone can do on a website, and bring it up. And he was acting like, oh, I can mess up your website. And I do think he was just joking, but that action alone could give E-Trade pause if they wanted to take that seriously, that he's actually threatening the company with harm. So they doesn't even have to go that far. Every brokerage contract has a clause in it that says that they have the right at their sole discretion to restrict or close an account without notice. So they could definitely do that if they so chose. Now they'd have a reputational risk if they did that.
In fact, let's listen to some of that where he discussed specifically the sort of disclaimer part of this, and then you can react, Jacob.
They go up, they go down. You can't explain that. No, but you should be aware of the risks going into any position. But again, especially ones I deal in, because they tend to be extremely volatile. I like to think that I have a good sense of my thesis, but I get stuff wrong. I have historically. I will again in the future. Could be. It's always important for you to understand that, and I have to understand that too. And so, but I get a feeling. If I have this feeling, I act on it.
Jacob, is there really any difference between Keith Gill stating his position and saying, you can do what you want, I'm doing what I want, and hedge fund guys who come out after amassing quietly a big position in a stock? I'm thinking of, obviously, you get Disney activists. You've got all kinds of companies. There's some in Salesforce right now. And then suddenly they put out a 13F, paperwork and with the SEC and say, I've taken a big position. How is what he did any different from that?
Well, Liz, you hit the issue on the head, and that is they're playing within the system. They're filing the 13F. They're following the compliance regulations.
There are no ways for an individual investor like him to file a 13F. This was his public way of filing a sort of retail investor 13F.
I agree with what my take on it is. This show, his presentation today was for the regulators, was for the plaintiffs bar. It's like, I'm teasing you. I'm putting out all the necessary disclaimers, but the people who really needed to be listening to him are those momentum followers who probably are not processing that important component of his message. That's really what I'm looking at, because he's more worried about, is he going to be sued? To me, the question is, and I don't even know I haven't even looked at this, is are there state consumer protection laws? We have someone who is bringing himself into this kind of focus, regulatory scrutiny. Even if the SEC has no basis, at least under the securities laws, are there other regulators, when complaints start coming in, who may try to find a hook? I don't have the answer to that as we're sitting here at the moment, but it's going to be interesting to see, because I do think there's going to be a desire in the regulatory enforcement world to see if there is a response.
Amy, one of the things people don't know about him, but you do, is that Keith Gill actually was a compliance officer in his previous life, right?
That's right. So he knows about the rules and regulations. He obviously knows about the market. He was a registered representative of a broker-dealer where he had customer accounts. So he's been in the business. He was a financial professional for many years. He knows how to operate on the fringes of compliance. And that is what he has done. And today, which was very different from his previous streams in 2021, he had a whole bunch of disclosures and disclaimers. Even before the show started, there was a disclaimer written into the description of the streaming venue, which read very much like the kinds of disclosures that you see on marketing, financial marketing pieces. Except they changed the audience and the content to read like this is, he is disclosing away himself. He is saying, I am giving you my opinion for educational and entertainment purposes. Do not follow what I do. Seek advice from your own financial professional. And he made those kinds of claims verbally as well within the first 20 minutes of his presentation. As a matter of fact, he spent a good deal of the first 10 minutes of his presentation, of which he was 20 minutes late to, really saying, this is really me. I only trade for my account. I'm not in this with anyone else. I'm not colluding with anyone. I don't have any investment partners. I mean, he went around and he actually said these things verbally because he knows that is the attack that regulators will make.
Amy Lynch, Jacob Frankel, thank you both very much. Coming up later, Charlie Gasparino has been looking at all of this. Yeah, you guys saw what happened yesterday. We're going to see the discussion that we have later on in the show. And then we've got 8 minutes left to trade. Shares of GameStop off the session lows, but still down, let's see, 38%. After a wild news day that included the stock's biggest cheerleader, investor Keith Gill, a.k.a. Roaring Kitty, reemerging for his first YouTube live stream in 3 years, and news that the company is planning a stock sale with up to 75 million additional shares after selling around 45 million last month. This, as Roaring Kitty said during that live stream, that he is not working or investing with anyone else secretly and that all his trading positions are his. Is Wall Street convinced? Charlie, what are they saying?
Well, they're saying that Charlie Gasparino told you so yesterday.
Told you so what?
Rewind it. Well, just that this is a troubled company. They pre-announced losses. They pre-announced declining sales year over year. They then turned around on the Roaring Kitty's pump. They turned around and issued more stock to dilute current shareholders. This is a very troubled company that's making money, raising cash, not from selling stuff, but from diluting shareholders. And if you want to buy something like this, it's a recipe for disaster. Here's the thing, Liz, and I think this is what kind of gets to the heart of it. I'm not saying there's anything illegal here. I have no idea. Like Roaring Kitty, Keith Gill says he's not working with anybody else. I think it's legitimate for the SEC, though, to inquire whether any of this was pre-planned between him and Ryan Cohen, who runs GameStop. I mean, I'm not saying it is, but it's a legitimate question to ask. I mean, literally, you go out, you say all this stuff, people are going to get excited, they're probably going to buy the stock. You get people excited, and then the usual pumpers about short squeezes, which this thing is not going to squeeze. So just take it out. It's not going to happen. Too many shares outstanding. You can borrow it easily. That being said, he comes out and says this, and then they turn around to loot shareholders, and the stock goes down 40%. That is something that the SEC should look at. Again, not saying there's anything wrong. But I would say this about this stock, about AMC, about any of these companies. They're operating, on borrowed time in many respects, because they are fundamentally problematic businesses that don't seem to have a good shelf life. I mean, Ryan Cohen has gone back to the old business model of selling in bricks and mortars. I mean, the kids buy these games in at the mall anymore. AMC is a movie theater business. People stream. I'm not saying streaming is a great business in of itself. Obviously, it's got problems, or Paramount wouldn't be in the crappy state that it's in. But people aren't going to the movies as much. There's not in many good films as much. So, these are problematic businesses. And if you want to throw your money at it, it may be up now. It's likely to go down in the future. We should point out, before the recent sort of controversy, or the fact that Mr. Gill is re-engaging on social media, I think GameStop was down like 30% year to date. AMC.
No, it is not. Not even close. It's up year to date about 62%.
No, I said before. I said before.
Oh, before.
He re-engaged on social media. It was down 30%, and AMC was down similarly. And based on its financial metrics, it's not unreasonable to say it's going to be down
Charlie.
again.
So my question to you is this: so nobody's saying that this is some amazing company. He says he sees a transformation. He's coming out. Hold on. You got to talk for 3 minutes. I'm talking now.
You said yesterday it was a good, fundamentally good business.
I never used those words. I said it made $5 billion in revenue last year. Okay.
No, but you said
that is not a zombie company, Charlie. Let me speak, and I will simply say to you that the world is littered. Charlie, stop. The world is littered with analysts who went out and pumped a stock and said it was amazing. People dove in, doubled down, and they lost a lot.
Who?
I mean, go to the .com world, and look at Warner Brothers Discovery. Warner Brothers Discovery back in April. Let's put up Warner Brothers Discovery. It was $22 or something like that back in April of 2022. Charlie, it doesn't help viewers if you're talking over me.
To some of the worst.
Can we put up the analyst calls on Warner Brothers Discovery? Today, after it is down more than 70%, there are still 11 analysts who have a buy rating on Warner Brothers Discovery. Can we put that up, please?
Does Warner Brothers Discovery make money? Is it profitable?
Well, it depends. I mean, it has a huge amount of debt.
Is GameStop profitable?
Last quarter it was. Last quarter it was. I'm just saying, you act like the people who invest in it, who are retail investors, are eating crayons, and they are not. They are retail investors who make their own decision.
Think about what you're doing, Liz. You're comparing GameStop to Warner Brothers Discovery, two different businesses.
I'm comparing the fact that there are analysts who have pumped it up, and they have been wrong, and wrong.
What analysts pumped it? What analysts?
There are 13 analysts who have a hold on, who have a buy on it right now.
What
Charlie?
Analyst said that Warner Brothers Discovery, which is not losing money, is to trade at 50,000 times earnings? I'd like to know that analyst.
It doesn't matter. He is only doing what activist investors have done in the past: take a position.
Who is only doing? Keith Gill is doing what Dan Loeb does?
He's done exactly what Dan Loeb has done. He's quietly amassed a position, come out and said, this is what I own, which is legal.
And Nelson Peltz does. You're comparing them to activist investors.
Yeah.
Remember that.
No problem.
Okay. Dan Loeb and Nelson Peltz would disagree with that analysis. Trust me.
Who cares? He's taken a position. He's come out and showed that position, and then allowed himself to state that
based on financial metrics. Keith Gill says, I like the fact that these guys. I like Ryan Cohen, so I'm go and buy the stock.
I'm just saying, Charlie. The stock can be disconnected from its internals. The stock can be a mess. But the fact is that he has done nothing wrong, yet that has been proven.
Well, I'm not saying he is.
And people can get in and buy it if they want.
Exuberance surrounding this. The irrational exuberance surrounding this is absurd. It's not a fundamentally good business. It's not even close. It's basically a potential turnaround story.
We can agree on that. We can agree that it's a huge question mark. It may eventually go down, all the way down. But right now, we're looking at a company.
Is it worth what it's worth now?
Right now, it's down still 39%. It didn't go up on anything he said today.
I'm just saying that.
And it might never. I'm just saying you can't hang these people out to dry because they invested in it.
Say what?
You can't hang them out to dry just because they invested in it. Okay. Oh, guess what? We got 20 seconds left, Charlie. Thanks for weighing in. That was fun.
As I've said before, as long as Keith did not communicate privately with anyone prior to his return to social media and him posting screenshots of his holdings, then he should be in the clear. Keith, along with every single other person, is allowed to share his opinions, post memes, and share his holdings online for everyone to see at the same time. There is nothing wrong with that, nothing at all. And it is certainly not market manipulation, not in the slightest. I know one of the guests commented about E-Trade possibly removing Keith because he jokingly hid the E-Trade logo during his live stream today. Let me play that clip for you, and you tell me if you think Keith should be restricted from his E-Trade account over this.
So that's that there. But I seen those headlines. E-Trade, I see those headlines. I gotta check. I'm checking in every day. I'll log in. I'm like, are my positions still there? Are they still there? Let me check. They're still there. Wait, they're still there. Okay, they're still there. I wasn't even like paying attention to the details. They're still there. But each morning I'm like, I don't know what's happening. So I go, all right, well, don't make me, but E-Trade, I'll do this with HTML. I'll do that. Don't make me remove it. I know how to do that. I'm just kidding. No, I'm going to put it back. We're good. Those positions are there. But I'll do it. I'll remove it. Don't make me. Don't make me do it. Don't make me. I'll delete that from the HTML. I will. All right, Mr. Robot Hacker here. You know, I learned a thing or two, and I know how to delete that. I don't want to do it, but I can. I'm just messing, people. Okay, it's still. I put it back.
Keith was obviously joking. It's so blatantly obvious. Speaking of joking, I want to share this clip from CNBC today when they cut live to Keith's live stream. I hope it gives you a laugh like it did for me.
Well, we're coming back with breaking news because the live stream has finally started. You can see that right there. About 28 or so minutes late, but nonetheless, it is underway. And we'll see exactly what's gonna happen there. Andrew Left's still standing by. We'll give you updates when they happen. You can judge for yourself what's going on your screen. So let's do some of these moves. Amazon, you bought more.
Okay, back to business. If E-Trade were to use Keith joking about removing their logo as justification to remove Keith from their platform, it would be a blemish on their reputation that would never disappear from the minds of individual investors. If E-Trade removes Keith from their platform, I would expect to see a mass exodus of individual investors leaving E-Trade for other alternatives. Because if they can do it to Keith, then they can do it to you as well. I don't know what the future holds, but I want GameStop to survive, thrive, and reinvent their business model in a meaningful way. I hope they were able to sell a decent number of shares today, and I hope we will hear news soon of the completion of their most recent offering. Regardless of what the future looks like for GameStop, what individual investors want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers. And we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.